I think when I entered inside, uh, got a very nice feeling. Honestly, we go for these speaking sessions. These are in 5-star, 7-star hotels, in closed rooms, lot of air conditioning. That dim lights. Lot of, especially for the speakers, lot of floodlights coming on your face. Sometimes you get distracted. You can't see people in the audience. So I think this room is really giving a lot of positive energy, and my topic is all about positivity. Eternally, I'm a very positive person. So open room, lot of sunlight, lot of brightness, conserving lot of electricity. So I think whoever decided this place, congratulations to the AIFA group and whoever is in the committee. The great choice. Um, So I think I'm addressing all of you. I think after a couple of years, my colleague Ritesh has addressed you in the last. This time, Sam was like insisting that you have to come. So I had some other meeting. I cancelled that and I came out here. Then I was wondering that what do I talk to you, because I think the best people to talk to all of you. Honestly, my firm belief is that people from your own community should actually talk to you. So when Dipesh talks to you, he's talking about he's living your life, right? So he can actually give you the real examples, growth stories, some of the best practices. But I don't know why, just because we sponsor AMC, people are invited to talk. Now we are the experts of our business, right? So if there is a AMC crowd, I can give them a lot of gyan, right? But a AMC guy giving gyan to distributor, somehow it doesn't connect, because I cannot teach you your business. You are the expert of your business, right? So it's always good to hear distributors talking, and we learn from them what the practical experiences are like. Most of the times we launch products basis feedback from distributors. We try to improve our customer service operations basis feedback from the distributors, right? But I think this is the trend, this is the pattern, so we have to talk, so we talk, right? So my topic is they didn't give me any topic, so I thought about this topic, and I'm fortunate to work with one of the renowned investor who's also the owner of our group, Mr. Ramdev Agarwal. I take him as my guru also. So a lot of things what we all learn in Motilal Oswal is what he teaches us, right? And so I'm going to try to take some of his learnings and try to share them with you and try to show you the kind of compounded opportunity we have, all of you and us as an industry, AMC and distribution together as an industry. I think we are living in a time where we can really create history for all ourselves, right? As we speak, we are already creating a lot of history, right? Because for the last 4 years, I think while a lot of wrong is happening in the world, right? We've been through a COVID, we have been through, we have lived, and there are living two wars which are going on, one in Ukraine, one in Israel, right? All kinds of stuff has happened. Despite that, our business has only doubled and tripled and quadrupled, right? I don't think anybody we have in this room whose business has not at least doubled in the last 4 years. Anybody out here whose business is not doubled in the last 4 years? I'll be curious to know, right? So in the last 4 years, everything has doubled, tripled. Markets every now and then are making new highs. So it's been a great journey in the last 4 years, and we believe that this journey is going to continue not only for the next 4 years, but it's going to continue for the next several decades. And when I see in this room, I think the average age of a person in this room would be more like between 35 and 40, if I'm not wrong, right? So if we are looking at India at 100, next 25 years, India achieves 100 years of independence, and we are talking about the Amrit Kal, right, 2047. So the journey of creating new milestones, the journey of growing your businesses, doing good for the investors is not going to be only for the next 5 years. Typically, we only talk about the next 5 years. It's going to be for 10 years, 15 years, 20 years, 25 years, 30 years, 40 years, even God knows, right? Everybody talks about 2050. In the last 20 years, a lot has changed, isn't it? 20 years back, our overall economy size used to be only $400 billion. The total assets under management for the AMC business used to be just under a lakh crore, not even a lakh crore, just under 50,000 crores sometime in 2000. Come 2024, the industry has grown from 50,000 crores to 65 lakh crores, right? The economy has grown from $500 billion to $3.8 trillion, and the journey of doubling the economy every 5 years is clearly out here to play, right? So what I'm going to do in my presentation is just try to go initially into elementary mathematics. We all talk about compounding. Compounding is something which we talk every day, every minute, and we are trying to show big dreams to the investors in terms of wealth creation by explaining to them what compounding is all about. But it's always go back to the basics and understand what compounding is all. And eventually we feel that India has been a compounded past and India will be a compounded future. So we'll spend a lot of time understanding initially what compounding is all about, and then how it has played in India for the last 2 decades, 2.5 decades, and what is likely to play out maybe in the next 2.5 decades, right? So you get a very big picture, large picture, what could be the opportunity size, how big could this industry become within the industry, how big or each one of us as stakeholders can become, right? You can put any number to your business and you can achieve that number. That's the kind of opportunity size which I want to show with you, and I want to leave those thoughts with you for you to plan for yourself and for your business into the future. So without taking much time, like I said, the presentation is titled Compounded Opportunities. I've taken, these days Ramdoji is taking a coaching, he's giving us coaching on compounding, right? So he's made a presentation on compounding and it is a pretty long presentation. I've taken some parts of those presentations just to, because I understand you know all of these things. But I just wanted to share a few slides. Now, everybody knows the rule of 72? Can you raise your hands? How many people know the rule of 72? Oh, that's not bad. So we have 50% crowd who knows, and we have still 50% of the crowd who doesn't know. So for those who don't know, obviously it's a good thing. So what we are saying is that if you want to know that in how many years you can double your money, all you have to do is divide 72 by the rate of interest. You'll get to know in how many years the money will double, right? Alternately, if you want to know in how many years the money will double, so you divide 72 by number of years, you'll get to know the rate, and 72 by the rate will give you number of years, right? Very, very important. All we are saying is that when you're talking to the investors, you're going to talk about that we are assuming 12% growth rate for your portfolio, 15% growth rate for your portfolio, 10% growth rate. So at, let's say 15%, in how many years, in a flash of a second, you have to say 72 divided 15, 5 years, the money will double, right? Alternatively, you can give reverse. You put 72 divided by number of years, you'll get the rate of return. If a client asks you that I want to double my money in 10 years, so you just have to do 72 divided by 10, 7.2% is what you need to give to the client to double his or her money in the next 10 years. So that's like a simple shortcut to understand that in how many years or how much return you need to actually double your money. As simple as it can get, okay? Now to get this compounding or compounded annualized growth rate, you need 4 values. You need the present value, you need the future value, you need the number of years, and it will give you what the CAGR is. Again, very, very basic, okay? I'm sorry to take you back to class 1, class 2, but it's always good to refresh. You know, sometimes you forget formulas, so it's good to refresh your formulas time and again. Now, this is again one of the powerful table what Ramdoji showed to us. Now, in this table, what he's saying, let's just stick to the doublings, okay? Now, if you double your money 2 times, let's say you have 100 rupees and you double your money 2 times, so you make 2 times, right? If you have 100, 100 becomes 200, you make 2 times. But if you double your money 3 times, so doubling your money once is 2, then doubling your money 2 times is equal to 4. So 100 becomes 200, it becomes 400, right? Now if you double your money 3 times in a span of time, then how many times you multiply your money, your present value? 8 times. If you double your money once more in a span of time, you are reaching 16 times. So if over a period of time, let's say somebody is 25 years old today, and this person has 50 years of investing horizon in mind, and this person is actually investing or trying to double the money 10 times, in that 50 years, this person can actually compound the money at a certain rate and make it 1,000 times. So if you put a lakh rupee today, 50 years at a certain rate, or let's say you have done 10 doublings in 50 years, your lakh rupee will become 1,000 times, right? So this is a beauty of this doubling. It's all about you're earning 15%, you put for 5 years. And every time we talk to our investors and even for ourselves, we always see next 5 years, that's it. After next 5 years, we'll see what happens in the next 5 years. But if you are able to achieve 15% for 5 years, and you say that I don't need money after 5 years, I need another 5 years, you'll actually double once again. So actually your original value will go up by 4 times. And you have another 5 years, you'll go up 8 times. You have another 5 years, you'll go up 16 times. Every 5 years you go at the same rate, the multiplier effect is completely different, right? This is the beauty of compounding. You are earning returns over your returns, not only like simple interest versus compounded interest. Okay, so again, a very powerful table. If you show to your investors, let them decide how many times they want to double their money. And if they say 10 times, then tell them this many number of years you have to stay invested, and this is going to be the outcome. All right. Now this is a simple example just to illustrate the same thing in example. If you, let's say 1974, today is 2024, 50 years again, you buy a property, it was 100 rupee per square feet. Today the present value is a lakh rupee per square feet, right? So 100 to 1 lakh is 1,000 times. Yes? Yes or no? थोड़ा जोर से बोलो. Yes, sir. 100 is become 1 lakh is 1,000 times, which means you have doubled your investment 10 times. Doubling raised to power 10 times, which is 1,000 times in total. Now, if you divide minus 2024 from 1974, it is 50 years. And if you divide 50 years by the number of times you have doubled, how many years have you been doubling? 5 years. Every 5 years you're doubling your money, right? And you do 72 divided by 5. So 72 divided by number of years, it gives you the rate of return, which is 15%. So if over 50 years, you have compounded at 15%, your 100 rupees is today valued at 1 lakh, right? And we are a young country. We are an emerging country. Average age of our population is under 35. If we can get this lot out here, actually they can live in their lifetime making 1,000 bagger. Now imagine somebody puts 10 lakh, what the multiplier would be. If somebody puts a crore, what the multiplier effect could be. So, we always say that you just put a number. You want to make 100 crores in your life? Can you dream of making 100 crores in your life? Sub blank, everybody's blank. Nobody's dreaming of 100 crores. I'm dreaming and I'm in process. Okay. Huh? In process. I would say in process. Right? If all of you support MOFSL, then the journey will be faster, right? We can, all of you at this age, the average age, you can make 100 crores. I think it's the starting point. And the way markets are going, 100 crores has become like nothing. Every second, third investor we are seeing who's having 50 crores, 75 crores, 100 crores, even more. Dipesh might know better. He's coming from big city, Bangalore, right? So, so this is all very, very basic. Just wanted to explain that 72 divide, the rule of 72, very, very important. The doubling concept, very important. Thinking about making 100 times, 500 times, 1,000 times, it's possible. All you need is rate of return and you need number of years. Like they say that nothing comes, there's no shortcut to making money. Everything comes with time. So whatever happens in 5 years and 10 years and 15 years and 20 years will happen in 5, 10, 15, 20, right? So all those who are trying to make 1,000 times in 1 year, 2 year, 3 year are the ones who are getting quoted in the SEBI report, and those guys who are actually then eventually burning away 95%, 98% of their principal, right? So rather than making their money 1,000 times, they're actually going into zero, or maybe they're going underwater, right? They might have to take money from somewhere else to pay. So stay away from speculation, do basic investing, simple mutual funds, SIP, give it time, assume 12 to 15% return, rest is history, right? Now, this whole compounding stuff, let's look at how the past has been, right? My slides are less about me talking, but more about you seeing what happened in the last 25 years. I can bet all of you, all of us as very normal human beings, all we can think is what has happened in our life in the last 2 3 years, and what can happen in our life in the next 2 or 3 years. Is that right? Can we think what has happened 5 years back, 10 years back, 15 years back? At least my memory doesn't go back that long, right? Or can I think what will happen after 10, 20, 30 years? It's very, very difficult, right? So it's always good to then go back to these slides to see actually what have we lived through. So some charts I want to show to jog your memory. So from 1950 till about now 2024 we are. So in 1950 our economy was broadly zero, nothing. 1950. Come to 2000 where I started, we were $500 billion economy. Our per capita income was just about $750, $800 per capita income, right? This is where we were just early this century of 2000. From there, we have been simply compounding at 9%. I'm rounding off 8.8 to 9%. We have been compounding at 9% for the last 75 years. From zero, we have reached an economic size of $3.8 trillion, right? This is what has happened in the last 25 years and the last 75 years. Simply 9% compounding. From nowhere, you are a $3.8 trillion economy. You are the fifth largest economy and you are heading towards becoming a third largest economy. And if this just continues for 30, 40, 50 years, who knows, we may become the second largest or the first largest. But from nowhere, we came in top 10. Now we are in top 5 and we will also go in top 3 by the end of this decade. Hopefully we will go in top 3 before the decade is over, right? So I've just extrapolated the data. If you grow at 10, 11%, by 2030, we should be a $6 trillion economy, right? While most of the analysts and the rating agencies are talking about $8 trillion by 2030, very, very conservatively also, doubling our economy in the next 5 years is quite possible. And everything to do in our businesses are all about economy. Those countries where the economic growth is high, businesses do well, people flourish in terms of their incomes and savings, businesses prosper, and their stock markets do very well. Which is the most successful market, consistently successful market in the world? It's US. Because they have been consistently thriving and striving in terms of their economic growth. And because the economy has ballooned to 23, 24 trillion dollars, their market cap is now 50, 60 trillion dollars, right? So they're talking about trillion dollars. We are talking about trillion rupees, right? Multiply by 84. So it will take a lot of time for us to reach those trillions and trillions of dollars, but it will all happen. So let's see the next slide. Let's look at our own market. Right now, you look at BSE 500 from 2003. The first leg of the bull run started in 2002, 2003. From there, we have compounded at 18.7% to reach, and this is now about 40. This is BSE 500. You can look at Nifty 50 where it was, right? Nifty 50 was just about 1,000 points in 2002. That 1,000 point in 2002 in 22, 23 years, today is 25,000, right? Simple compounding of 16, 17%. If you go by the inception, BSE Sensex 1979, 100 is today 80,000. Now, thoda correction ho gaya. Good, right? So 100 is 80,000, 800 times. All you have to do is just stick to the top 30 companies of the Sensex for the last, I don't know how many, 60 years or something, and 15% compounding, and your money is 800 times, right? So this is all about our market. So we looked at the compounding journey of our economy, compounding journey of the largest universe of index, which is the BSE 500 index. So here is again the parallels if you draw. GDP has grown from 500 billion to 3.8 trillion. Forex reserve, I mean, early 90s, we were literally going bankrupt, right? We were going to the World Bank, we were trying to pledge the gold to borrow money. Fortunately, we just escaped that kind of a episode to happen. But again, from nowhere in 1998, so just about 25 years, today we have crossed how much? Aapko to pata hi hoga. Somebody in the crowd, what is the foreign forex reserves today? Those who give wrong figure, I'll take gift from you. Huh? It's crossed, so sir says right out here. We have crossed $700 billion, and with the way RBI is managing stuff, it's a matter of time that we'll have $1 trillion in reserve. And what these reserves have done to us, we are the fastest growing economy, isn't it? We have controllable inflation, we have stable interest rates. RBI doing a great job on managing these reserves, leading into stability of rupee. Our rupee has been the third best performing currency. There was a time, every time there used to be some turmoil in the economy, in the global marketplace, our currency used to fall, slide like any, I mean, from 45 to 75 just happened between 2013-14, right? The taper tantrum, right? So we have stable rupee, we are able to attract a lot of FDI, foreign flows, etc. So we are lot more stable. What's happening in the surrounding countries? What happened in Sri Lanka sometime back? Zero. What's happening in Pakistan? They are borrowing, otherwise they are zero, right? What's happening in Bangladesh? Depleting. We are standing tall out here. Thanks to this and thanks to the RBI for this, right? And then the market cap to GDP, this is fine, but look at the profitability. Because the economy has grown, right? Because the economy has grown, uh, the total profits of all the listed companies, just about 20 years back, sometime in 2002, 2003, this total number used to be about 2 odd lakh crores. By 2008, the total profits of all the listed companies put together became 4.5 lakh crores. And from that period, another 20 years, today the total corporate profit is about 14 lakh crores, right? So the profits are moving up, therefore the markets are also moving up. There's a correlation between how much the profit grows and how much the market cap grows, right? So that's how the Indian companies have grown their profits, and the journey obviously continues, right? Now let's look at this. Is very, very interesting how large cap, mid cap, small cap is also changing. What is today's large cap was yesterday's mid cap. Today's mid cap was yesterday's small cap. So sometime in 2013, the last company in your top 100 index, what was the market cap? It's out here. Somebody just has to read it. Yeah, 10,000 crores, right? Today, what is it? A lakh crore. 1 trillion. So I said $1 trillion. We are still in 1 trillion rupees. If you look at the small cap 500 index, the smallest company, the 250th company was 500 crores. Today it is 10,000 crores. The last company of the index, right? And if you look at the mid cap index, the smallest used to be 2,200 crores. Today it is 32,500 companies. So the last company of the index today is 1 lakh in the top 100, which used to be 10,000. In the mid cap, it is 32,500 today, which used to be 2,000. And small cap today, the last company is 10,000, right? This is how things change over time. This is all compounding effect. Compounding at 15%, 20% over 10 years, 15 years, 20 years. This is what the impact has happened. And look at our own, my guys have not put the right representation out here. But if you look at our own business, right? Just in 2013, what was the total equity AUM? Just, it's a living memory. 2013, everybody remembers. What was the total equity AUM in 2013? A lakh equity AUM. Equity AUM. Anybody has the answer? We just spoke. We just spoke. A lakh crore, right? What is it today? Equity AUM. लास्ट मंथ डेटा है ये रिलीज हुआ है इट्स अबाउट 45 lakh crores equity AUM 1 lakh has grown to 45 overall industry 65 lakh crores of AUM right in 11 years that's a good growth of 20-22% over 10 years and that compounding over 10-11 is slowing down, we have to grow at a double rate and for more number of years and then quickly catch up. So if we can achieve a 12%, we will grow, we will become as big as China. But if we grow at 10%, we will be 10, 15 trillion dollars lesser. We will still be the second largest economy. However, 10% for 25 years, you go up 10 times, right? 12% for 10 years, you go up how many times, Dipesh? From 3 to 50, 3 to 54. Sometimes you can't even calculate, right, on the fingers. 7, yeah. So that's where the economy looks like in 25 years. You and me will live this. We will live seeing India at 30, 35 trillion dollars of economy. Now what happens with that? If the market cap to GDP is, let's say, 100%, 100 to 20, 130%, now this is all the predictions on the market, right? This is Nifty. Now if Nifty grows at 10%, lower than what we have done in the last 25 years, then the Nifty will be 223. ये तो होना ही है. This is happening. And somehow on these numbers, I'm seeing a lot of boredom, no excitement, right? No cheers. Bhai, if this doesn't happen, your business will also struggle, right? So please enjoy these numbers. If you grow at 12%, very conservatively, Nifty 50 companies growing at 12%, we go to 3,38,000. And if you grow at 15%, 25,000 will become 622,000. Huh? It's just about the rate and time. And the multiplier effect is completely different. At this rate, just compound your existing AUM. Let's say today you manage X AUM and it grows at 15% and you go off to sleep. No further sales. And you wake up after 25 years and that AUM has compounded 15%. What could be the multiplier? Just think about it, right? And then I'll talk about your revenues also. And as the economy obviously will grow, we will keep getting richer, people will keep getting richer. So our per capita income, which is $2,500 today, it will go at just simply 9% for 25 years. Our per capita income will be $20,000. And 30% of that is actually going into savings. So what happens when people get more money in their hands is that the savings pool will become very large. So all this number of 25 years it took for us to make a saving pool of $12 trillion. In the next 25 years, this pool of savings will become $100 trillion. Now $100 trillion is your opportunity size. From this $100 trillion, some money will come in equities. Within that equity, some money will come in mutual funds. And within that, some money coming in mutual funds, some parts of that money you will get. That's where I said that you can put a number on your desktop, whether you want to become a 1,000 crore IFA or you want to become a 5,000 crore or a 10,000 crore, opportunity is here. All you have to do is, हिंदी में बोलते हैं लूट लो, तो लूटने का टाइम है. This is the time. How many of you can go out and get as many investors as possible to take a lion's share from this savings pool, which is going to gradually build up over the next 25 years, right? It's going to be a huge, huge kind of opportunity for our business. And then it comes to you yourself. Now I have been doing this I did this 2 years back, so my numbers are not updated. But at this stage, we said that if you take, there are 100,000 IFAs, average AUM per IFA, I'm just going by per capita IFA, average AUM per IFA 2 years back used to be about 7 crores. Right? At that point of time, the equity AUM was 31 lakh crores. Today it is 45 lakh crores. So maybe the 7 crores would have gone to 9 crores or something. It's a slightly dated slide, but just get the message what I'm trying to give. So today, if 100,000 IFAs on an average are managing 7 crores, if the compounding is at 12%, right? Just by 2030, very visible, next 6 years, 7 crores per IFA will grow to become 34.8 crores per IFA. This number is slightly up because the base numbers have changed in the last 2 years. Again, I'm saying, what is the opportunity? Forget the 25 years. What is the opportunity in the next 6 years? How many of you will be over the average of 34 crores and how many of you will be below the average? Think about this. But per capita IFA AUM will be 35 crores. So your bare minimum target, if at all, I'm sure a lot of you are much bigger than that, but if at all, it has to be higher than 35 crores. If you are below that number, you have to reach to that number. And what this AUM will do to you is that I'm assuming a regulator is generous and they don't do any cuts and all that stuff on the TERs. Let's say you've been making 1% yield in the past and you continue to make a 1% commission. So per IFA, revenue per IFA is, today is about 7,10,000 rupees. If this compounding of 12% plays out and per capita IFA, like I told you, will be about 35 crores, this 7 lakh rupee per capita IFA will go up to 35 lakh rupees. This is all average. As I said, how many of you can be over that number? Over the average, how much can you outperform the average of the entire IFA industry, right? So I just wanted to share some of these thoughts that when you think about here and now, you'll have small goals, you'll have small targets. I can tell you that just about 3, 4, 5 years, we were struggling with our performance. We were stuck up with our AUM at about 40,000 crores. For good 3.5 years, we were like 35,000, 40,000. 35 market upper, sales was negative, right? I'll give you my own example. Sales was negative. So market up, we used to reach 40. Market down, we used to go to 35 for 4 years. But every time we were talking internally in our board meetings with our sales team, we always said 1 lakh pahunchna hai, 1 lakh pahunchna hai, 1 lakh pahunchna hai. Every year we used to have a 12-month, 24-month target. So last year also we had a target. And we said that, okay, Motilal Oswal AMC, now we have performance. Things are looking good. We had no idea. We said, okay, September of 25, MOAMC will become a lakh crore. Today we are in September of 24. Our opening AUM was 54,000 crores, 1st April 24. Target of 1 lakh was 18 months away, September 25. Mid of July, we crossed the 1 lakh mark, right? That's how it plays out. Now we have September 25, 2 lakh target. And 2030, we have a 5 lakh target, right? So we have done our own numbers. This is how industry will grow. This is how economy. This is how the savings pool. So we have done the Excel sheet calculation. It gives a number. If I want 5% of the market, how much the industry will become big, and then how much I can become. That number, building that number and fitting it into your mind and then thinking of it 24/7, I think is very, very important. It will take you out there. And then the opportunity where you are the fastest growing country, you have the, you have the best macros, you have the best earnings growth trajectory, and you have the best market with so much of liquidity. I think whatever number you keep in mind, you can achieve that number, right? So just to kind of help you to think big. And this is again, very old slide. Just because of this presentation, I was going through Ramduj. I wanted to show this latest, but I could not because I could not pull the data. I just figured out that this is Ramduj's portfolio. And if you can Google on YouTube, he's done a couple of presentations where he talks about his 0 to 1,000 crores, how he reached the 1,000 crores. And this data, you can see it was last updated in March 2021. This is Ramduj's personal portfolio, not his stake in the company, right? He's a couple of $1 billion now, but this is just his equity portfolio. What it says here, he started in March 1989 with about 1 crore rupees in equities. And ever since he has been 100% in equities. So 89, let's say 90, how many years? 90, so 10, 20, 30, about 30, 33, 34 years, 34 years. Yeah, he started with 1 crore of rupees. That crore in about 5 years time became 30 crores. This was the Harshad Mehta time. Right? That 30 crores, then there was Harshad Mehta scam. It went down to 10 crores. So 1 crore became 30 crores in one bull market. That timing in the market versus time in the market. This is the explanation, right? But he stuck around in the market. .com boom came. So 7-8 years his portfolio was struggling at 10 crore rupees. 10 crores became 100 crores in Feb 2000. This was the peak of the .com or that the internet bubble what we saw, right? So 10 became 100, 10x, and then it went down in 2003 back to 30 crores. 70% loss on the portfolio. Continued to remain invested, and then you had the mother of all the bull runs, which was 2002 to 2008. That 30 crores went up to 500, again came down to 225. 2014 we had the taper tantrum, 540, and ऐसे करते 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 March 21 it reached 2000. 0 to 2000 in 35 years. We talked about how many times you're going to double your money in your lifespan. In his 35 years, he's done more than 10 times, right? Out here, 1 crore to 2000 crores. And can anybody guess? Because he's still in the market. From 2001 till 2004, the markets are 2 times or 2.5 times more higher, right? This is Sensex at, this is Sensex, right? So this is Sensex at 50,000. Today it is 80,000. So I just took the figure yesterday from our treasury desk, and they said that this 2000 figure today is 4,687 crores. So between 2021 and September of 24, this 2000 is actually 4,700 crores, which means that in the 35 years, his zero, or let's say a crore, today is 4,700 crores. By being in one asset class, across all time frames, living through all kinds of uncertainties, living through multiple times portfolio falling down by 50-60%, but after 35 years. So when you see 3-4 years, you see bad, but when you see 30-35, zoom out and see long picture, one becomes 4,500. I'll get this presentation updated, but I did want to show you this. And he has spoken his own journey. You can go on YouTube and you can Google the way he explains. You'll enjoy listening to that. So finally, to conclude, yes. This is, yeah, so he's been adding a little bit more money, but largely it has been a static portfolio, right? So then he diversified his money, he added more money. So it includes, it's like, so this whole portfolio is compounding at 21-22%, which with additions also. Additions, subtractions will never happen. So he never really needed money to pull out. But he kept adding money out here. Like in this phase of 2014, a lot of money came to us also. Because now they put all the money in our own mutual fund schemes. So actually this journey is all to do with how our schemes have performed. But this 35-year journey compounding is 22%. 22%, 35 years, one has become whatever, 47 or something. So to finally conclude, compounding is not intuitive. Long-term compounding needs imagination. You have to think 25 years, 30 years, 40 years, you have to imagine things, right? India has a solid compounded past. We have seen 9% compounding from $500 billion to $4 trillion economy. India is rapidly moving from poverty to prosperity, $2,500 per capita to 19,000. That's all imagination. This is all the imagination which is going to happen. India is the ultimate next $1 trillion story. And like Buffett says, don't bet against America. Ramdevji says, don't bet against India. So with that, I'll end my presentation. Thank you so much for the patient listening. Hope it helps you. And it was lovely talking to all of you.
Thank you, sir. That was a wonderful power-packed presentation with a lot of facts and figures presented before us, giving us real food for thought. Something interesting which came out to us, we can definitely be on par with China. Thank you. Yeah, sure. We are going to beat US, hands down. Can we have Mr. Jason George, manager of Motilal Oswal AMC, to kindly join Mr. Akhil Chaturvedi? Also calling up Mr. John Joseph Vianney. Mr. John Vianney? Yeah. We have a lucky draw to be conducted, the draw to be taken by Akhil sir himself. I hope every one of you have not forgotten to drop in your yellow coupons here.
229.
Coupon number 229, first call. 229, yeah, that's the winner. The winner, MFD, Mr. Sunil from Cananore. Thank you, sir. Mr. Shashi Kumar from AIFA Thrissur chapter to kindly come forward to hand over a small gift from our side to Mr. Akhil Chaturvedi.